Hello and welcome to the ISE ETF and Index Outlook for April 16th, 2012. This is Patrick Seresna. As always, we start off with a chart of the S&P 500 using that SPDR exchange traded fund symbol SPY. And we were identifying over the last couple of weeks this trend line that comes along all the bottoms that were placed in over the last rally. Really at this stage we were suggesting last week that any break of that level would open the window for a corrective pattern that would correct down towards the two lower focal points. We continue to believe that this is going to be a correction and not a crash, and that it will lead to a buying opportunity, but it is likely not over yet. It is natural for market corrections to last even 2 to 3 weeks in duration and correct at least 5%. So more than likely we will probably still see the S&P 500 test that 134, 135 level, or even if it's a very deep correction, go even as low as the 127, 129. But somewhere within that zone is likely where the selling should all stall. And if we see all the selling come to a halt down there, we'll be looking at whether or not new buying opportunities have emerged. Next here I want to take a look at the ISE Water Index, which is symbol HHO. The ETF for that trades under the symbol FIW. We have a very interesting scenario where we have almost like a head and shoulder style pattern potentially developing, and really at this stage that 88 level, sort of where all the lows came in on the two sell-offs in March and April, really do mark the sort of like a neckline point of support. What's more important here is whether or not the rally in this water index is able to push back to its previous highs. If we have any rally attempts here that consistently are failing below this 93 to 95 zone, that really will put further pressure on this index to have one more correction. If we see a break of that 88 level, the likely supports could come in as low as 84 on the downside before the buyers come back and create new support for this index. Next here I want to take a look at the ISE Cloud Computing Index, which is symbol CPQ. The ETF for that trades under the symbol SKYY, and more or less we were suggesting that we felt that the high of the Cloud Computing Index a couple weeks ago would come in somewhere within the 2150 to 22 focal point, but could theoretically have a short spurt that could even go as high as 23. But really this 2150 did actually reverse this on the downside. There is still no change in trend, in a sense that we're making higher highs and higher lows, but we are clearly in a corrective phase, and it's being supported by broader market weakness, particularly weakness in the technology sector. It is likely that this could lead to again another wave of selling at some point if the whole market goes through that same correction. If that's the case, we could go as low as a 19 and a quarter to 1875 support line down below, but doesn't necessarily even have to go that deep. But we are looking for further correcting before this index becomes a buying opportunity. Finally, we wanted to look at the ISE Global Engineering and Construction Index, the symbol CVL, a second time. We looked at it last week, identifying that head and shoulders pattern, suggested that a break of that level would open the window for a downwards correction down to retest those zones. And we just wanted to bring it up and look at how the market correction has actually played out. And we now have come into the first support line that we drew in there around that 230 to 235 level. Again, this is quite correlated to the broader indices. So here, any failed rally attempts, particularly anything that fails below 245 where the neckline sort of lays, then there's room for this to sell off one more time, even test as low as 230, and even temporarily break down to, let's say, 225 or 220 before a buying opportunity emerges. That was your ISE ETF and Index Outlook. Thank you for joining me.